At the end of every year, I try to look back and think of the top lessons that I learned while trading small cap penny stocks. It's no doubt that 2020 was probably one of the most wild trading seasons that we'll see in a long time, but that doesn't mean that there are not lessons that we can learn from it and take into our trading in 2021. So in this video, I'm going to share with you what I believe are the three main things that I learned about trading in 2020. Now keep in mind, these lessons are going to be kind of specific to my trading niche and style, but I believe that these ideas can be applied to whatever style of trading that you prefer to do. So the first and most important lesson that I learned this year was to never let the exception dictate your trading strategy. So my core trading strategy is to base my trades off of significant levels of support. So this means that if and when support is broken, then I should be able to sell into previous support as resistance and keep my losses extremely small and sometimes even break even on the trade. However, the trap that so many traders fall into when they do this is that when the stock starts to retest previous support as resistance, they picture it as the stock is coming back and they hold and hope for it to squeeze higher like they initially planned. And then, of course, as we know, a stock squeezing back above support after a breakdown is the exception, which means it does not usually happen. And all it takes is for this one time for you to hold and hope that it squeezes higher, just for it to never happen, and then the stock will drop into new lows, and you'll be taking a much larger loss than you had planned for, which is a fatal mistake in long-term profitability. So no matter how much I hope for the stock to recover, I know that if it has broken my level of support, then I must sell into the retest of previous support as resistance. If it happens to be that rare time where the stock does squeeze higher without me, I will be okay with it and I will not chase it because I followed my rule. The second most important lesson that I've taken from 2020 pertains more to swinging stocks for multiple days, and this is a lesson that I'll truly never forget. So a few months ago, I initiated a long position on ALPP, this very tiny OTC company that was seeing a weekly chart breakout. I knew the potential of this breakout could go extremely parabolic. It's not uncommon to see breakouts like this go 25 cents, 50 cents, and even over $1 per share in a few weeks. And keep in mind, this was at 6 cents. And the fatal mistake that I made on ALPP was selling on day 2 just because of intraday weakness, completely ignoring the fact that it was still holding the big picture breakout. And I did this because I was so used to seeing this day 2 breakdown of VWAP and rejection as my common way of selling day 2 NASDAQ swings, and I incorrectly applied this to an OTC weekly chart breakout. So I sold on day 2, even though it was still holding clear above the breakout, and within a matter of weeks, ALPP ran to over $4 per share, with, like I said, my initial entry being near 6 cents. So you can see, well, I'll never forget this lesson. And so far, it's actually been a pretty good lesson to learn. Earlier this week, I took a trade on BTBT, a first green day stock that was seeing a breakout into the all-time highs. This being a crypto company and Bitcoin currently running like mad, I had good confidence that as long as the all-time high breakout held, BTBT would keep running. I took this into consideration as I swung into day 2 and avoided the mistake of selling due to intraday weakness. BTBT held above the 1240 breakout, which was also my entry level, and squeezed into the $20 within the same day. The final and most fundamental lesson that I've really solidified in 2020 is to only trade when you have a true statistical edge. If there's any golden rule of trading, then this is it. If you're a new trader watching this video, I beg you to not fall into the idea that you must be green on every trade or green on every trading day. These goals simply breed terrible trading habits such as overtrading, revenge trading, and cutting your winners way too quickly and letting losers run far too long. I used to think that it was my duty as a day trader to trade every single stock that ran big and to trade every single day. However, in 2020, I found that this was simply not true for me. There will be stocks that will have massive rallies that I will not be able to trade simply because there was no statistical edge for me to trade them. And I've learned to be truly okay with this. It's not a missed trade if it never fit your strategy in the first place. Sticking to this idea will allow you to have extreme conviction when you do see a stock that fits your strategy, because you'll know that you're not predicting that this is the next trade that will be a winner, but instead you're simply letting the long-term statistics play out. So these are the top 3 rules that I've learned from trading in 2020. What did you learn the most about trading? Let me know down below, because I'm sure that some of you probably have some pretty funny or embarrassing stories that you can share with us and probably help some other traders as well. If you enjoyed this video and want to stay up to date with me, be sure to subscribe and hit the notification bell. Leave a like if you thought this video was helpful, and I'll see you in the next one.